Today, I'm going to show you which specific investment could dramatically reduce your tax burden in 2025. As a registered CPA and owner of a tax planning company, TaxElm, I've watched this investment consistently outperform other tax saving strategies while staying completely within IRS guidelines. That's exactly why I'm making this video today, to show you the best investment for minimizing your taxes in 2025 and how to implement it correctly. All right. Let's dive right into it. So the first investment that I want to talk about is oil and gas investments. And so what is this investment? It is investing in oil and gas production. And so there's this little thing that the IRS put into tax law that's called an intangible drilling cost. An intangible drilling cost can oftentimes be written off in the first year or within year 2 or 3. And intangible drilling costs, generally stating, are somewhere in the 60 to 80% of your investment. So how does this work? Let's say that you made an investment of $100,000. If you make an investment of $100,000, and let's say that intangible drilling costs were 75% of that investment, that means that you're going to make an investment today in 2025 for $100,000, and you're going to get a $75,000 deduction to help offset your other income. That's today. Now, that investment then will hopefully continue to grow and provide income throughout the years, and then eventually there might be an exit where you have a return of capital and maybe some additional money on top. So that is the power behind oil and gas investments. This intangible drilling cost is not in any other type of investment. So it can be a super powerful strategy to be able to offset your income, even if you're a W-2 income earner, a business owner. This is a little bit different than real estate because you don't have to be a real estate professional to be able to take that loss, that intangible drilling cost from your investment in year one, and utilize it to offset your other income. This is a super powerful strategy to not only get some tax savings and tax advantages of, but also potentially grow your wealth as well. And one thing that we talk about when we talk about oil and gas investing is we utilize this strategy a lot for those in the, say, $300,000, $400,000 to about $800,000 of income, because we can utilize it as a tool to help not only grow our wealth, but also we can use the tax savings part of it to maximize the QBI deduction, the qualified business income deduction, to bring you in to a phase where you might be phased out. Well, we can take this laws to help phase you back in to that deduction. Now, the biggest thing with oil and gas and any type of investment is making sure that you're going with a provider that's doing things right. There is a lot of people selling oil and gas investments out there that can be very bad vehicles to be into. So I just want to make sure you do your due diligence. Make sure you dot your I's, cross your T's. You're working with someone that you know, like, and trust. And we have partners within TaxElm that we recommend to talk to for oil and gas investments. But you got to make sure you're working with a trusted vendor. If it sounds too good to be true, it might be too good to be true. So make sure you're double checking, make sure you're interviewing, make sure you're talking to multiple people to make sure that you make the best out of this investment. Now, before I go into the other investments, I also just want to make it very clear. When we talk about investing for tax savings, that means this investment is going to be a tax advantaged investment. And I want to make it clear, I would never recommend somebody invest in something simply for the tax advantages, because that's not a smart investment. The tax advantages of an investment should just be a little bit of a cherry on top. We want to see our money grow, whether we get the tax savings or not. And if we can prove that that can be a successful investment, then the tax savings that we get is just that, this is just that cherry on top for it. So make sure that you're making wise decisions there. Don't just get into something, and also make sure that you're working with vendors that do things right, because there are a lot of bad apples out there. All right. So the second investment that I want to talk about is asset purchases. And you know this as a business owner. And again, when I talk about asset purchases, this is only if it's in investment purposes. I would never say go out and buy a truck that you don't need. Go out and buy a new piece of equipment that you don't need. But if you need those items, this can be a super powerful strategy where you could potentially get 100% of your investment as a deduction in year one. Or maybe even you're utilizing leverage, a loan, to help even get a bigger deduction in year one. And we have a lot of partners within TaxElm, a lot of programs that we talk to business owners about that talk about this idea of a leveraged asset purchase. But let me just give you kind of a quick breakdown of how that would work. Let's say that you bought a piece of equipment that qualified for Section 179 deduction, where you can deduct it all in year one. You were an active participant, and you dotted your I's, crossed your T's, did all these different things. But let's say this equipment was $100,000. And let's say you put 20% down. So you invested $20,000, put $20,000 down. You took an $80,000 loan out, but you're getting a full deduction of that in year one if it qualifies and if you're dotting your I's, cross your T's. So you put $20,000 down, but you're getting a $100,000 deduction that can potentially help offset your other income. That's the power behind asset purchases, and specifically utilizing leverage to help less money out of pocket, but get a bigger deduction still. Now, what these can do is they can sometimes cause some phantom income down the road, because guess what? Let's say you got that $100,000 deduction year one, you're able to offset your income, but you still have an $80,000 loan that you have to repay. And that asset is likely going to produce some income over the years and all these different things. So that asset is producing income, but you use your deduction in year one, so you're not necessarily offsetting all of that income with any kind of depreciation deduction, but you're then taking the funds that you got from that to help pay off your loan. So that's what I call phantom income. There's different strategies, there's different ways to look at this, but just make sure you're thinking about all of these different pieces, because these investments are not something that you just say, watch a 5-minute video on, watch a 10-minute, watch an hour-long webinar, and then just sign up for them. You want to make sure you understand the intricacies of, okay, what is my investment going to do from an investment standpoint from day one? What is the tax advantages of it? And what does this look like over the course of this full investment period? Whether that's 5 years, whether that's 10 years, maybe that's 20 years. What does this look like from an income, projected tax savings standpoint, and help that tune in to what type of investment that you want to make. The third investment that I want to talk about is direct real estate investment, and also utilizing a cost segregation study and bonus depreciation in that investment. And as you know, we talk about this all the time. Real estate can be a super powerful wealth building strategy, which is great. And getting involved in real estate can be a super powerful thing. You know, most wealthy people I talk to that are members of TaxSum that we're working with in our program have some sort of real estate investment. Maybe it's direct real estate investment, maybe it's a long-term rental or short-term rental, or maybe some type of syndication. But they're often somehow involved in real estate, which is a great investment, a great wealth building tool, which also brings with it some tax advantages. So why does real estate save taxes? The main reason is depreciation. And you can utilize a cost segregation study to accelerate depreciation, because depreciation on a property is typically you're going to take it evenly spread out over the course of 27.5 years or 39 years. But if you utilize a cost segregation study, you can take that investment, that initial cost, and move a lot of that depreciation, a lot of those expenses up front. And so what does this mean? It means that you might have a rental property that is cash flowing, but on paper, it's losing money because you have depreciation that's offsetting that income from it. So you're receiving cash from it, but on paper, on your tax return, you're showing no income from it, which can be a super powerful thing. They can also be providing big tax losses, depending on the cost segregation study, the type of property, and depending on how you're organized. Whether that's a short-term rental, you can use a short-term rental to help offset W-2 income, to offset business income. Maybe you can qualify as a real estate professional. There's 2 major tests you need to follow. It's not super easy, but maybe you can qualify as a real estate professional. If you can, you could use real estate losses to offset your business income, your W-2 income. Of course, if you have passive losses from real estate, you can use that always to offset other passive income. But real estate can be super powerful. Now, don't just jump into real estate for the tax savings. Look at real estate as a real investment, and then just let that tax savings piece be that cherry on top. Make sure you're making calculated decisions when you're going down these paths. Now, since I can only cover this investment strategy in so much detail, I don't want you to leave this video and fall into what I call the generalized content trap, where you become so wrapped up in generalized advice on YouTube that you never take action. And this is exactly why I want to offer you an entirely free demo call where I'll look at your exact situation and help you come up with a game plan for your taxes. Click the link below to book your demo call. All right, now back to the video. The fourth investment I want to talk about is private placement life insurance that can help create tax-free investment growth potential and tax-free withdrawals in the form of a loan down the road. Now, whenever I talk about life insurance, people start to get a little weary of it because there's a lot of bad actors out there. There's a lot of people out there that are selling different types of life insurance policies to the wrong people. It's not ready for it. You're not made for that. So with this, I always make sure if you're going to invest in life insurance as a vehicle to help gain some income, to help move money into a tax-free investment vehicle, make sure you're working with someone that fully understands your situation. If you have someone knocking on your door that's a life insurance agent, they're probably not the right person for you, because I cannot tell you how many people that were at an income level that it did not make sense for them to invest in life insurance, but they did. And they got caught in a bad product that doesn't make sense in their situation. And because of that experience, that's why so many people are afraid of life insurance. But if you are a successful business, you're generating decent income, you're investing in real estate, you're investing in these other things, your business is generating, you're funding retirement accounts, a private placement life insurance can just be another piece of that puzzle and could provide a powerful tax-free income down the road for you in that vehicle. But again, just make sure you're working with a provider. Work with someone that you know, like, and trust that knows these things. Within TaxElm, we have vendors that are very specialized in this. They're not going to put you in a product that's not meant for you. They can even analyze your current product, the life insurance that you may be already in, and tell you, yeah, this was good, you're good here, or no, we need to get you out of there as soon as possible and get you into a vehicle that makes sense. Because life insurance agents can oftentimes be commission hungry. You might have two products and they're going to recommend the one that pays double the commission on it because guess what? That goes into their pocket. That's not the type of person you want to be working with. You want to be working with someone that's going to put you in the best vehicle possible, regardless of what gets put into their pocket for it. Final investment that I want to talk about when it comes to business owners is a solo 401k. If you are looking to fund a retirement account, a solo 401k, especially if you have no outside employees other than family members, a solo 401k is going to allow higher contribution limits than your traditional retirement accounts or IRA accounts. You could put up to $70,000 away or more into a solo 401k each and every year. And then the cool thing about solo 401ks is you have Roth options or you have traditional options, and you can choose to invest in those how you want. The other cool thing about solo 401ks, if it's set up correctly, you have the possibility to self-direct it. That means you can put money into your retirement account and invest in whatever you want. That could be crypto, that could be real estate, that could be all these different things that you can invest in inside of your retirement account. You know how many people that I talk to are utilizing the strategy of funding a solo 401k, self-directing it, that love to get into these different alternative investments that we talk about so often that can be super powerful wealth building tools. They love to get into these alternative investments, but they don't want to use their liquid cash that they have. So they use retirement funds. They self-direct those retirement funds to invest in these different assets that are going to provide massive growth. And depending on the type of account you have, could potentially have tax-free withdrawals if it's a Roth account down the road. But utilizing a solo 401k, self-directing it, doing these things the right way can be a super powerful tool for you. Now, again, of all the investments we talked about, oil and gas, asset purchases, different leverage asset purchase programs, direct real estate investment, short-term rentals, long-term rentals, private placement life insurance, solo 401ks, with any type of investment, again, we want to make sure that if we're investing in something, let's first look at it from a wealth building tool. How is this investment going to produce me income? How is this investment going to multiply to grow my wealth? And then let's look at the tax savings from it. What is the tax advantage piece of that investment? How is that going to be a little cherry on top? Oh, this investment's going to do really well. Oh, I put this cherry on it. This investment is really, really cool and a really powerful tool. Now, second disclaimer is that there are a lot of bad actors out there that will try to sell you something that is not legitimate, will tell you these returns are going to happen that are not even possible to happen. So you need to make sure you're getting into a vehicle that makes the most sense for you. The biggest thing that really crushes me is when I see small business owners, when I see people that are trying to grow their wealth, invest in something that was too good to be true, had returns that were outrageous, that were never possible, but the guy sold them on it and they invested in something, and guess what? They lost all their money. That can be very, very hard to see a small business owner that's trying to grow their wealth do. So make sure that you're working with trusted investors. Now, no investment is guaranteed. There's no investment that is guaranteed to do it, but there is calculated risks that you can take to say, okay, this one I feel good about. They've been doing this for 20 years. Here's their track record. This person, they just started. They came out of something. We have no proven track record. We don't necessarily understand it. They have crazy projections on what it's going to do. Make sure you're making those calculated risks. Interview multiple people. Run it past your team of advisors and make decisions that are going to help you grow your wealth while also save you taxes at the same time. So now that you've seen the powerful tax-efficient investment strategies that you can utilize for 2025, what excites me most in my practice is how this approach can dramatically reduce tax burdens while building wealth. Through analyzing countless investment portfolios, I've discovered that tax efficiency isn't just about choosing the right investments. It's about strategic positioning in today's tax environment. The most tax-efficient clients I work with aren't just chasing returns. They're maximizing after-tax wealth using opportunities that most investors overlook. So if you want me to analyze your situation and show you how to optimize your tax plan, click the first link in the description and book a complimentary demo call. I will see you on the next video.